morning, everyone. I hope everyone's having a good morning, and thank you for coming. Just want to do a really quick mic check. If you could use your chat function and type in if you could hear me or not, I'd really appreciate that. Okay, great. So you guys could hear me. So thank you so much. My name is Ricardo Rodriguez. I'm a financial advisor at the Credit Union of Southern California. Today's seminar is called Social Security, When You Should Start Receiving Retirement Benefits. Many people assume that that they should start receiving Social Security retirement benefits as soon as they retire and stop working. But that's not the case. Retiring and claiming Social Security benefits are different. You have options, and learning about them will help you make a better, well-informed decision as to when to start receiving the benefits. At the end of the presentation, I'll be glad to answer any questions that you might have. So let's get started. Again, I'm a financial advisor at the Credit Union. There's a total of 5 financial advisors at the Credit Union. So I have 4 other colleagues, Ryan Gallo, Tom Tan, Michael Genoway, and Joseph DeMaria. And we also have an assistant. Her name is Janet Maldonado. So we're pretty much spread out throughout the Credit Union branches. I'm based in the branch in Whittier on Greenleaf Avenue. If you're ever in there, please feel free to come by and say hi to us. Again, if you have any questions specifically about your specific needs, you could always contact us, anyone in the group or me specifically. At the end of the presentation, I'll provide our phone numbers. All right, so let's get started. So when should you start receiving retirement benefits? As you approach retirement age, you'll be able to claim Social Security benefits. It's one of your biggest, or claiming your Social Security benefits is probably one of the biggest decisions that you'll make. Should you begin receiving benefits at your full retirement age? So full retirement age is considered age 66 to 67. And depending on your birth rate, you could also start receiving Social Security benefits at an earlier age, which is 62, but the benefit amount that you'll be receiving is a little bit less than if you waited till age 66 or 67. Or should you wait past your full retirement age and receive a larger monthly benefit, and that begins as late as age 70. So basically, what you want to consider here are there's 3 retirement ages to consider. There's age 62, or your full retirement age at 66 to 67, or you could wait until age 70. So why is this an important decision? It's an important decision because one size does not fit every person. It's a very personal decision. Again, it's a very important decision that you'll make. Once you start receiving the benefit, you can't go back and cancel it and then start receiving it again at a later date. So in other words, you can't start at 62, then realize you made a mistake, then stop at 63, and then wait until you're 65 or 66 to start again. So once you start, you really can't stop. So it's a really important decision. And it's all very personal based on your personal assets that you have, other retirement accounts, other bank accounts, and so forth. I guess sometimes the answer isn't simple as to when you should start receiving the benefits. You might have to start taking Social Security benefits as early as possible, and that's because you might have day-to-day living expenses. So if you're 62, you might say, hey, I want to start receiving them right away, and you really can't wait. Some other factors to consider is maybe illness, disability, unemployment. But if that's the case, you might have to wait, or you should wait until your full retirement age, which is usually 66 to 67. When you when you take benefits, it could significantly affect your overall retirement income. With pensions disappearing, Social Security remains one of the major sources of guaranteed lifetime retirement income for most Americans. Once you apply, your retirement benefit is locked in for the remainder of your life. In most circumstances, not counting annual inflation adjustments or recalculation to account for additional work. So taking a time to explore your options now can help you make sure that you're making the right decision when you retire later. The timing of the benefits can also affect your spouse because he or she may be entitled to receive spousal.
We go here.
Because
yeah, I know, but
we're going there.
Thinking straight again.
No.
Can you guys hear me?
Staters Bros. There's a.
Yeah, I know, but we can turn here. We're already here. Look. Yeah, we're already here. It doesn't matter. We're already here. We're already here. We're already here. What's the point?
Yeah, I think someone has their audio on. Yeah.
Here, I don't like here.
Okay, that's it. I think they're in their car trying to drive and find directions. Okay, so I'm going to just try talking over them. Hopefully they could hear us, and hopefully they'll turn or mute their audio off. Okay, so timing the benefits can also affect your spouse because he or she may also be entitled to receive spousal retirement benefits and spousal survivors benefits based on the amount that you receive. Again, probably one of the most important takeaways here is that once you start taking your benefit, you can't go back and sort of redo it. So you can't start at 62, realize that you made the wrong decision, stop at 63, and then restart at 65, 66, 67, 70. So it's really important to, before you start receiving the benefit or elect to receive the benefit, really do a thorough analysis on what you have in other savings, retirement accounts, and so forth, and really do a deep analysis that we can help you out with at the credit union or at the Social Security office to help you determine what route or what age is the right age to elect to take the benefit. But again, the earliest age you could take it is 62. Full retirement age is 66 to 67, and you could delay it up to age 70. Okay. So some things to consider. Some things to consider is your full retirement age and benefit calculation. Again, I just sort of went over that. The amount of your future benefit and the effects of early or delayed retirement, and I'll get into that in a bit. How long you expect retirement to last based on your life expectancy. So it's sort of a difficult one because we don't know how long we're going to live. Is it going to be a couple of years after retirement, or some people are living up to 90 years or 100 years. So it's very difficult. So that's sort of a difficult one to answer. Hopefully everyone's going to live a very long lifetime, 100 years old or so, but you just never know. So this is a very difficult question to take into consideration because we really don't know how long we're going to live. Whether you plan to continue working, other sources of retirement income, income taxes, and finally, how your spouse might be affected. Okay, so again, you basically have 3 retirement ages that you could start taking Social Security. So these ages or these milestones or markers are probably the most important ones. So you could first start retirement benefits at 62, but it's a lower amount, or you could start at 66 to 67, and that's considered your full retirement age, or you could wait until age 70 and receive a higher amount. So how your benefits are calculated. Okay, so Social Security retirement benefit is based on the number of years that you've been working and your earnings over those years. To qualify for Social Security retirement benefits, you must have worked at least 10 years in a Social Security covered employer, meaning that you've been working for a company and part of your paycheck goes to pay Social Security benefits. So you should have worked 10 years in a company like that, which I'm sure all of us have. When you become eligible for benefits, again at age 62, the Social Security Administration calculates your full retirement benefit. Your highest 35 years of earnings are indexed to inflation, then they are averaged. Finally, a formula is applied to determine what's called your full retirement benefit. You may also hear your full retirement benefit referred to as your basic benefit or primary insurance amount. If you're full retirement age, at your full retirement age, you will receive 100% of this amount. So again, full retirement age is 66 to 67. But if you begin receiving your retirement benefits early, say 62, or any time before your full retirement age, again, your full retirement age is 66 to 67, but you could start at 62, 63, 64, and 65. If you elect anything between 62 to 65 or 66, you'll receive a lower amount than your full retirement benefit. Again, it's going to be a reduced amount. So I'll go over that. So that's the next slide. So how much will you receive by taking the benefit early? Again, you could take, the baseline is your full retirement benefit is age 66 to 67, but you could start at 62. So in this example here, someone's full retirement benefit at 66 is $1,800. But if they start receiving it at age 62, their monthly benefit is $1,350. Again, if you take it any time before 66 or 67, which is considered your full retirement age, you do receive less in terms of your monthly benefit. Okay, so let's move forward. So again, the benefits. Okay, so here's a big, in terms of percentages, if you take your Social Security at age 62 versus 66, it's about a 33% less benefit. So 33% is the difference between 1,800 and 1,300. You could also elect to take the benefit later at age 70. So again, here the baseline is full retirement age is 66 to 67, but the longer you wait after retirement, say 66, 68, 69, 70, the more you'll receive in terms of a monthly benefit. So in this example, if someone starts to take retirement benefit at 70, they will receive $2,376 versus if they took it at 66, which is, again, your full retirement benefit age is $1,800. So that's a big difference. So the difference between taking the benefit at 70 versus 66 is about $576 a month, or about a 33% benefit. All right, so this is the full spectrum of comparing the monthly benefits from age 62 to full retirement age at 60 to delaying the retirement at age 70. So again, the baseline is full retirement age, anywhere between 66 to 67. You could start receiving benefits at 62, but at a reduced amount, or you could delay it up until age 70 and receive a much larger amount. So again, the big difference is about from age 70 to 66, you'll receive about 33% more. And the difference between receiving it at 62 to 66, again, is about 33% difference. So one big difference between receiving or delaying the benefit from age 62 to 67 or age 70 is not only the monthly amount, but if you start taking the age 70, and if you add up all the payments during that time up until you reach age 70, the amount of money or benefits that you receive over that time should be about $129,000. But again, it's all a very personal decision, and it really depends on where you are at, where you're at in your life. Some people elect to continue to work. They like their job. Some people have other retirement benefits. They have income property. They have a 401k, pensions. They have savings accounts. So it's really all a personal decision and where you are in your life. And maybe you don't like your job and you want to retire at 62. Probably you want to retire a lot earlier than that. But it really, it's a very personal decision. It's something that you guys should consider before you're going to retire. And again, here at the credit union, we could go through all the different scenarios that are available for you with benefits. We could look at your retirement benefits that you have for your job. Maybe it's a pension or 401k or 403b. We take into account other savings accounts that you have, and we look at everything. So one thing that this slide doesn't show that I've seen quite a bit of is a lot of people come to me, a lot of members of the credit union, and they want to retire at age 62. So right when they're eligible for Social Security benefits. The big dilemma that they have is that Medicare doesn't start until age 65. So if they're not covered by any other kind of medical plan, so say if they stop working at age 62, then obviously they're not going to be able to be covered by their employer's medical plan. So that's not available. And if their spouse doesn't have medical insurance, or if they've already retired, then they're not covered by their medical plan either. So just as an example, say if I'm single, I'm 62, I quit my job or I retire, I no longer have medical insurance. And then Medicare doesn't kick in until age 65. So that's a 3-year gap there. So I often talk to people and they say, well, I want to retire right when I hit 62. And then I ask them, well, what are you going to do for medical insurance? And they say Medicare, not realizing that Medicare doesn't kick in until age 65. So this is a big dilemma if you don't have another form of medical insurance, again, through your spouse or some other means. So what happens in this case, if you don't have medical insurance, then you have to go out and buy it through like a medical insurance exchange like Obamacare. The only problem with that is that medical insurance is very expensive. I recently spoke with someone who was paying $800 per month. So if you take that into consideration, so if you have to buy your own medical insurance for 3 years until you hit 65, assuming that you retire at 62, that's $800 a month, right? So if your monthly benefit from Social Security is $1,350, you back out $800, then you're left with $550. That's not enough to live off. So you really want to take into consideration your medical insurance that you'll have if you retire at age 62, 63, 64, because medical insurance through Medicare, you're not eligible until you hit age 65. So that's a huge consideration that people just don't really take into consideration. And then during those years, you obviously want medical insurance, which is expensive. If you don't have medical insurance and you have some kind of an accident, then you have to go through Medi-Cal. And if you go through Medi-Cal, what they'll look at is your other assets. So if you have other savings and accounts, you might have $100,000 saved up. Medi-Cal really looks at that, and you may not be eligible for Medi-Cal, so you have to pay out of pocket, and that's going to be very painful. So again, probably one of the biggest things that I look at when people are looking to retire and they want to retire early is the Medicare issue. And because insurance is so expensive right now, oftentimes people elect not to retire at 62, 63, or 64, and they're waiting until 65, or again, full retirement age, 66 to 67. So that's a big, important consideration to take into account. Okay, so how long will retirement last? So there's no way to know for sure, but retirement is lasting longer than people think. According to the Social Security Administration, about 1 in every 4 retirees will live past age 90. That's a long time. So if you're going to retire at 62, that's a good third of your life there. 1 out of 10 will live past age 95. So you'll want to really plan to maximize your Social Security benefits here. So Social Security does take into account cost of living adjustments. So every year, once you're in retirement or receiving Social Security benefits, you do receive what they call living wage adjustments. So you might receive maybe a 1.5% increase every year. The problem with that is that that's not really keeping up with inflation. So this year alone, inflation is probably running about 6%, maybe even as high as 7%. So we've all seen that in our lives. So this year alone, in the year 2021, gas prices have gone up about, I think it's about 40 or 50%, which is a lot. So I just paid $5 per gallon to fill up my tank this morning, which hurts quite a bit. I'm sure you guys have seen it as well. So it's gas prices that have gone up about 50%. Food prices have gone up about 33%. If you rent Rentals have gone up a lot. If you own your house, that's great, but if you don't, you've seen housing prices continue to increase. Medical prices, again, they continue to go up. So inflation, I think, is really running between 6 to 7%. And I actually just saw something on CNBC the other day that inflation is at a 30-year high. So that's really, really bad. So that's something to consider when you're looking at retirement, is looking at the cost of living, wage or increase that Social Security provides you, in that current rate, which is about 1 to 1.5%, that's really not keeping up with inflation. So to be honest, what I'm seeing a lot of our members coming in when they start looking at retirement, there's really two big factors. Is they're looking at the inflation and what Social Security is going to provide them, and given what inflation is now and the cost of living, and also the Medicare issue at age 65. So those, we're talking about a lot of things here, but those are two big drivers that are really driving people's decisions to whether or not take early retirement at 62, 63, or 64. Okay, so another important consideration is, do you plan to continue working? If you're thinking about working well into your 60s or 70s to increase your retirement age, this might be a pretty good option. So you can still continue to receive Social Security benefits while you're working. So most people could, they start taking Social Security benefits at age 62 and they continue to work. So again, one way to benefit from the Social Security benefits is to supplement it, continue to work. And again, so you could start taking Social Security benefits at age 62. You're still working, so you're earning income from your job. But again, you're also covered with medical insurance. So some people, again, they start opting to take benefits at 62, continue to work, they earn extra income there. They're covered with their medical insurance. Then at age 65, they transition over to Medicare, they quit their job, and then they still continue to receive Social Security benefits. If you continue to work with your job, it's not going to reduce your Social Security benefits. So that's a big misconception where people think, okay, well, I'm going to continue to work. They don't want to continue working at 62, 63, 65, or up to 70 because they think that's going to reduce your Social Security benefits. And that's not the case. You'll still receive what you're deserved. What you've paid into, basically, that won't be reduced by working or taking your Social Security benefits while you're working. So how working will affect your benefits? Okay. So if you're working, so if you're under full retirement age, so this gets a little confusing here. So I don't want to get too deep into the woods here, but basically, it does affect it a little bit, but not much. So before full retirement age, $1 for every 2 that you earn exceeds the annual limit of 16,920 for the year 2017. The year that you reach full retirement age, $1 for every 3 that earnings exceed annual limit of 44,880 in the year 2027 or 2017. At or full retirement age, earnings will not be affected by your benefit. So again, it's a little confusing. And again, it's a case-by-case issue based on how much you earn and when you start taking retirement benefits. Again, it's a case-by-case, a little confusing. And what I would encourage you to do if you're planning on working and receiving Social Security benefits is come to talk to us here at the credit union, financial advisor, or going to talk to someone at the Social Security Administration benefits office. Again, it's a little confusing. I don't want to confuse too much with this slide, but I guess the big key takeaway here is that you can continue to work and receive Social Security benefits. And again, one of the biggest issues that people do that is for the medical insurance. Again, because you're not eligible for Medicare until you hit age 65. So what other retirement income will you have? So Social Security is probably one of the primary forms of retirement income that people do have. But some other earnings might come from job earnings. So that during your working years, you may have saved some money and have something in savings, or you might have purchased some properties that produce some kind of income, maybe rental properties, but that's considered job earnings, or also job earnings if you take Social Security at 62, 63, 65 and continue working. You could supplement your Social Security with job earnings. You might also work for a company that offers pension benefits. Most companies these days don't offer pension benefits, but so you might work for a company that grandfathered it in, or you might work for a state or federal agency that does offer pension benefits. Again, that's another way to supplement your Social Security benefits. And the last one is people have savings and investments. So people might have an investment or a retirement plan, like a 401k, an IRA account, or just a general investment account, or they may just have some savings that they have. So the combination of all these four, Social Security, job earnings, pension benefits, and savings, will all be key factors in determining, how much money you could spend in retirement and how comfortably you could live. So will your benefits be taxable? So they will be taxable, and it's based on this grid here. I would say in my experience, a good 80% of the people that do receive retirement benefits, Social Security benefits, they don't have to worry about taxes. But in this graph here, up to 50% of your benefits may be taxable if your combined income, again, if you're single filer, if you earn anywhere between 25 to 35,000 per year, or 32 to 44,000 per year if you file as a married filing jointly, or your benefit may be taxed up to 85% if you earn over 34,000 if you're a single filer, or over 44,000 and you file married or filing jointly. Again, most people that I deal with at the credit union, if they're at full retirement age and they're taking the benefit of $1,800 per month, so on an annual basis, that's $21,600. So they're below, and they're a single filer, so they're below that threshold of getting taxed 50%. And again, I don't want to confuse you. It's not that you'll be taxed 50% of your benefit. What this is saying is that 50% of the benefit is taxable. So again, you're not going to be taxed 50%. It's 50% of the benefit will be taxable. So again, assuming that your annual benefit is $21,600, you'll be taxed on half of that, which is $10,800. But again, I don't want to confuse you here. What I would advise you, again, because this is having to do with taxes, is talk to your tax advisor and see what might be the most beneficial for you, in ways that you could sort of massage it and not pay so much in taxes. But again, based on my experience, got about 80% of the people that I deal with really don't have to worry about paying taxes on any of their Social Security benefits. So how will your decision affect your spouse? If you're married, there's another important question that you'll need to ask before you make the decision on taking benefits. How will this decision affect my spouse? That's because when you begin taking your retirement benefits, it can dramatically affect your spouse's benefits during retirement, and thus your household income. Your decision can also affect survivor's benefits your spouse may be entitled to, and your spouse's decisions will make as well. Together, you'll need to consider what's the most appropriate combination of ages combined, again, based on your age and your spouse's age, your income, and your life expectancies. I want to point out here too that other people, such as your dependents, children, or former spouses, may also be eligible for benefits based on your earnings record, but the rules are a little bit different. So we're not going to cover that in this presentation at this time. So retirement spousal benefits. When you're married and both, let me start there again. When you're married and both of you and your spouse are working and your job's covered by Social Security, each of you may be entitled to retirement benefits based on your own earnings record. As you recall, at your full retirement age, you're entitled to receive 100% of your full retirement benefit. And you can also receive reduced benefits if you start taking at age 62. You and your spouse may also be entitled to spousal benefits. For example, if your spouse has had a low lifetime earnings, he or she may be entitled to a spousal benefit based on your earnings record that is larger than your retirement than a retirement benefit based on his or own earning record. At your spouse's full retirement age, this spousal benefit will generally equal 50% of your full retirement benefit. And again, all of this is very personal. So what I would recommend is, again, meeting with one of us or someone at the Social Security Administration office in discussing with your specific needs with them. However, this amount may be reduced if your spouse files early. For example, in your spouse's full retirement, if your spouse's full retirement age is 66 and he or she files at age 62, your spouse will only receive 35% of your full retirement benefit amount. This reduction is permanent, so it's important to be careful to consider carefully before you file. And keep in mind that your spouse can collect spousal benefits until you file for full retirement. So here's a really good example. So my parents, my dad retired at 62. So this is a real life example that I'm going to give you. So now this really affects your decision to take retirement at age 62 or full retirement benefits. So my dad, he retired at 62. My mom was a housemaker. She didn't work. So she was eligible for Social Security, but at age 66 to 67. So my dad retired at 62, so he wasn't receiving his full retirement benefit. Again, he wasn't eligible for Medicare until age 65. So there was a 3-year gap. So at that point, he was Mexican, so he was actually covered with Mexican medical insurance. So if he ever had an issue, he'd have to go to Mexico and go to the doctor there. So that's one example of receiving, taking your benefit early, but having to wait for Medicare. But the way it affected my mom is that since my father took his retirement benefit early, when he passed away, her benefit was greatly reduced. So now she's only receiving, I think it's about like $800 to $900 per month. My dad passed away several years ago. Had my dad waited to receive his full benefit at age 66 or 67, my mom probably would have received now, instead of the maybe $1,000 that she's receiving, she probably would have received the full benefit amount or close to it, which is about $1,800. So it's a really important consideration, especially if there's an age gap between husband and wife. So my dad was about 9 years older than my mom. So I think my dad probably should have taken into consideration that he's going to pass away earlier and leaving my mom with the benefit amount that's a little bit lower than she should have received the full benefit amount. So it's really important to consider your spouse's age and when you receive your full retirement benefit. Okay, so I'm seeing that there's some audio issues, so I'll try to speak up a little bit more. might be my computer, so I will try to speak up. So I apologize. Hopefully you could hear me a little bit better now. So the next slide is survivor's benefits. In addition to retirement benefits and spousal benefits, married couples must consider survivor's benefits. When you take your Social Security benefit, it can greatly reduce the amount of income available to your spouse should you die. So this is sort of what I was talking about earlier with my parents, but it does affect it greatly. Because your surviving spouse will generally receive the benefit that you were receiving at the time of your death, unless your spouse is already receiving a higher benefit based on his or her earnings record. If your spouse's life expectancy is much longer than yours, this can be especially important consideration. So again, this is exactly what I was talking about with my parents. So my dad was 9 years older than my mom. My dad started taking his benefit at 62. He passed away about maybe 15 years after he started taking retirement benefits. My mom was a housemaker, so she didn't work, so she didn't, pay into the Social Security system. So basically, her benefit was based on my father's earnings and his benefit. So by him taking Social Security early at 62, that greatly affected what my mom was going to receive when my father passed away. So again, a real life example is instead of my mom receiving the full benefit amount of $1,800 now, she's only receiving $1,000, I believe. I can't remember if it's 950 or 1,000, but it's a lot less than she would have received if my father would have waited until his full retirement age. So it's a lot to consider, and I think one of the biggest considerations is again the age difference between your spouse. Again, there's a lot of considerations, but again, this is a real life example of how this affected someone in my family, and an important consideration that you guys might want to take when you consider taking retirement early. Okay. So the power of delaying the benefits, and again, this is sort of what we've gone over before. You could start at age 62, but if you could wait until age 70, you'll maximize the amount that you'll receive on a monthly basis. Some people can't wait till age 70, so it's really a personal decision. But in a case where it's a husband and wife, if you guys could wait until age 66, full retirement age, or age 70, the amount of monthly income that you're going to receive is always going to be greater. But again, it's a very personal decision. Some people can't wait till full retirement age at 66 to 67. So it's really going to be till at age 62. But again, if you start receiving benefits at age 62, just know that your monthly income is going to be a lot less. So again, it's all a very personal decision, and we could sit down with you at the credit union and help you out with that and just go over different scenarios. And again, it's all very personal based on what you have in other savings, other retirement benefits, other pension plans, your medical expenses. So it's one shoe doesn't fit every person, very personal decision. And that's something that we could definitely help you out with the credit union. And if you need help beyond that, you could go down to the Social Security Administration office, and they could also help you out with and run different scenarios for you. Okay, so the next slide is something called restricted application strategy. So I'm sort of going to lightly go over this because it likely doesn't affect most of the people on the call here, but potentially available to those who were born on or before January 1st, 1954. So it's a program called Restricted Application Strategy. It allows you to collect spousal benefit, then later collect own worker benefit of a certain requirement if certain requirements are met. So it's sort of a confusing thing. This legislation was recently passed at the end of in 2015. So it really only affects you if you were born before January 1st, 1954, which would make you age 67 now. So likely the people on this call now are younger than 67, so it doesn't affect you. Again, I don't really want to get into too much detail because it really probably doesn't affect a lot of people on the call here. I don't want to confuse you. It is a little confusing. The only thing I'll tell you is that if you were born before 1954, which puts you at age 67, I'd like to discuss this with you because it can affect you. But again, I'm assuming that most people on this call are under 67. So it doesn't, this part of the presentation really doesn't affect you. Again, this is restricted application exemption. Again, doesn't affect you if you were born before 1954. Again, which puts you at age 67. I'm assuming most of the people on the call today, this morning, are not at that age. So, but if you are, please reach out to me and I could explain it to you in more detail. Okay, so the choice is yours. So it's very important. So I'm glad you guys are on the call this morning because there are quite a few important decisions to make, and the decisions are not reversible, meaning if you start taking Social Security benefits at age 62, you can't stop at age 64 or 65 and say, I made a mistake and I want to go back to work, and then start collecting them again, or stop Social Security benefits and then restart them at age 66, 67. Once you cross that threshold and start making or start receiving the unemployment or the Social Security benefits, you can't go back and cancel it and restart it. So it's a very important decision that you're going to make. And if you're on this call, you're already considering it. Typically, people start considering or thinking about their Social Security benefits anywhere between 6 months to 3 months before they retire. I would say in the age of COVID, a good benchmark would actually be 9 to 1 year before you start thinking about retirement. The only reason I say that is in the past, people could go to the Social Security office 3 months before they retire and sit down with an agent and discuss their situation with them. But because of COVID, what's happened is a lot of the offices are closed or they were closed, and there's a huge backlog of people looking to make appointments with the Social Security agent. And because of that, sometimes an appointment might take 3 months, 4 months, 5 months to get. So what I'm recommending for people to do now is not waiting the standard 3 months before retirement, but really looking into it 9 months or maybe even 12 months before they think about retiring, just because of the backlog of trying to make an appointment at the Social Security Administration office. So it's a really good idea. And it's not only really affected the Social Security Administration office, it's really all offices involved with the government. So whether it's the DMV or even getting a passport, I've heard stories of people waiting up to 9 months to get a passport. And even if you try to get a passport overnight, some people are, camping out, at the government office like a day or two in advance. So the big key takeaway here is that if you're thinking about retirement, and the general rule would have been thinking about it 3 months before ahead of time, I would really start looking at it 6 to 9 months or maybe even a year just to be safe. So again, the choice is yours. So you may decide to take benefits early if you need Social Security income right away. You want to invest your monthly benefit. You want to delay having to take funds from other retirement vehicles. Your spouse wants to delay taking benefits. Or you may decide to take the benefits later if you want higher monthly retirement benefits. You want to maximize survivor's benefits income. You plan to work longer, or you're able to file spousal benefits first, then switch to your own benefits. So there's quite a few different decisions to make. What I would recommend is, again, looking at if you're planning on retiring, really taking the time. Again, a lot of the decisions that you make are irreversible, meaning you start taking benefits at 62 or 63, you can't stop them and restart them at a different time. I would say one of the biggest things that I'm running across, again, when members are coming to me and they're looking for retirement, is the Medicare issue. Again, Medicare is 65. You're not eligible to receive Medicare benefits until 65. And again, one of the things I didn't cover earlier on is even if your spouse has, like your husband and wife, and you're planning on retiring and you say, well, I'm just going to go on my spouse is still working and I'm just going to go on their employer-sponsored insurance plan. You might want to check into that too, because oftentimes if you add a person to their insurance plan, you have to pay an extra monthly fee for that. And sometimes it could be as much as $400 that your spouse is going to have to pay. So if your spouse is maybe paying $400 for her insurance or their insurance, by adding you, they might have to pay another $400 to $500. So it sort of negates the reason of retiring, because you're going to have to pay more. Or if you don't have any medical insurance that's going to be available for you, then you're going to have to buy medical insurance through a program like maybe an insurance exchange, like through Obamacare, and that might be very expensive. So again, I just talked to a member recently, and they're paying $800 a month. So if you're going to take early retirement benefit at 62, and the benefits, like I said, $1,350 per month, but you're paying $800 in medical insurance, it doesn't make too much sense, because you're only going to net like maybe $500 in Social Security benefits. So it doesn't. So again, what I'm finding out is more and more people are really waiting until they turn 65, or waiting until they turn their full retirement benefit age, which is 66 to 67, to really start taking and looking at Social Security, the benefits that they'll receive. So I see a question here. It says, so can a person apply online? Well, you could apply. I think a lot of people are being encouraged to apply online now. But again, before you make any decisions and apply online, I would speak to someone. So maybe make an appointment at the Social Security benefit office, or speaking with a financial advisor. So you can apply online, but once you make the application and you make the decision to go for it, that decision is not reversible. So it's a big decision you're going to make, and it's going to affect your entire retirement years. So if you're 62 and the life expectancy is 85, 90, 100 years old, that's really a huge, it's a decision that's going to impact maybe a third of your life. Your spousal, your spousal benefits are going to be impacted. So take time, talk to people, talk to us, talk to your accountant, talk to your other advisors. Most importantly, talk to a Social Security Administration office, and they could really help walk you through it. So can you apply for it online? Absolutely. But before you do that, talk to someone. So talk to us. So another question I see, Covered California can help with medical insurance. They can. I did see a commercial this morning, coincidentally, where it's, I think someone in LA County, or people that live in LA County that are eligible can receive medical benefits or medical insurance for $1. I don't know what the financial requirements are for that. Maybe it's for very, very low income people. Maybe if you're receiving Social Security benefits, that knocks you out automatically. I'm not too sure. That's one consideration, but I think a lot of it works like Medi-Cal. So Medi-Cal are for people that are with low income benefits. The problem with Medi-Cal is that if you apply for it and you have savings accounts, they'll look at that and they take that into consideration. And say you have $50,000, $100,000 saved in your savings account, or you have other assets, Medi-Cal takes that into consideration. And if they see a large balance in your checking, savings, or money market accounts, they'll say, hey, why aren't you using those funds to pay for your medical expenses? And having money could actually be a hindrance when you're applying for Medi-Cal. So what you don't want to do is get into a position where you retire at 65, right? And if you retire at 62, so again, you take early benefits at 62, you don't have medical insurance, and you're sort of chancing it, saying, hey, I'm not covered at 62 until I'm not covered until I'm eligible at 65, and I'm just going to chance it for the next 3 years and not have medical insurance. The problem is, if you have an accident and you go to the doctor's office, you go hospital stay, one night hospital stay is at minimum $10,000. Intensive care is, I've seen it as high as $100,000 per night for intensive care stay. What you don't want to have, or you don't want to be in a position where you don't have medical insurance, and then later on you have to pay a big medical bill, and then you apply for Medicare, again, Medi-Cal, you apply for Medi-Cal for some relief from the medical bills that you have to pay. What Medi-Cal will do is look at your other assets, and if you have anything of value, again, savings accounts, money market accounts, properties, they'll look at all those assets and then ask you, why aren't you using these assets to pay for your medical expenses? And that becomes a big dilemma. So you don't want to be in that position where you don't have health insurance, you apply for Medi-Cal, you don't qualify there, and then you have to start paying for these medical bills that have come in that will deplete all of your assets. So you don't want to do that. So again, Covered California is an option. Covered California is part of the Obamacare system. But again, that's very expensive. I've priced it out with some clients, and it could be anywhere between $600 to $700 per month. Okay, so there's another question that says, can your wishes for benefit distribution be added to your living trust? That's a very good question. I would say a living trust encompasses quite a few things. So typically, when you talk about Social Security benefits, it's you're really talking about your spouse or your children. So minor children are covered up until they turn 18. Your spouse is definitely covered. A living trust encompasses quite a few things. It could encompass adult children who wouldn't, be eligible for Social Security benefits. It could encompass maybe the beneficiaries on the living trust could be charities. So the quick answer to that is really, it depends on who the beneficiary is named in the living trust. And I would say a quick answer would be that the benefit distribution into a living trust probably isn't allowed. I'm not a Social Security expert, so I would really defer that to maybe the Social Security Administration, but the quick answer to that would be no. So it's really the only beneficiaries that would be covered here to be a surviving spouse, an ex-wife, or your minor children. So it's a very personal decision that you make there. Okay, so again, the first step is to contact the Social Security Administration office, get a benefit estimate, get a copy of your Social Security statement. You can also log on online, and that's socialsecurity.gov. And that way you could sort of guesstimate or estimate how much you'll receive in benefits, how much you've paid into the system. Contact your Social Security Administration office and discuss all your options at least 3 months before you reach age 62 or before you plan on retiring. Again, this is 3 months. I would recommend, again, given what's happened with COVID and the closure of government offices and the delays with everything, I wouldn't recommend 3 months. I would actually recommend 9 to 12 months beforehand. So a lot of offices have been closed. There's a big backlog. You can also apply online, in phone, or in person. You could do that. I think applying online, what that means is actually applying for the benefit and starting to receive the benefit. Before you do that, before you make any decisions that really are irreversible, talk to people, talk to us, talk to the Social Security Administration, really figure out all your options, whether it's medical, other assets that you have, other savings, other pensions. Again, the biggest thing is it's not a reversible decision. So if you start at 62, you can't stop it at 63 or 64. Realize that you've made a decision or a wrong decision and then restart it later on. Once you start, you can't stop. So that's a very important decision, affects your life, affects your income, affects your spouse. So be very careful with this. And again, my real life example is my dad. He elected to take benefits at 62. He died maybe 15 years after his retirement. And my mom was left. Again, the age difference between my mom and my dad is about 9 years. So her benefit amount now that she's receiving is a lot less than she would have received if my dad waited his full retirement age. So $1,000 doesn't take you too far. So luckily, she has other resources. She owns her property. She doesn't have to pay rent or mortgage. But I can't imagine, living on $1,000 a month. It's a very difficult thing. Again, given where inflation is now, $1,000 a month today is buying you a lot less than what it bought even just at the beginning of this year. So again, inflation's like 6 to 7%, probably a lot higher. So again, a very important decision that you guys have to make. So before you make any decisions, again, a year before you want to retire, talk to people, talk to us at the credit union, talk to the Social Security Administration office. And again, one of the benefits of, hopefully you guys all live in Whittier, but there's a very close Social Security Administration office in Whittier. It's actually right up the street of from our Greenleaf office, just a couple of blocks away. So the address there is 6700 Greenleaf Avenue. Again, that's the office to the Social Security Administration office. They make appointments, they take appointments. Again, think a couple of months in advance to make the appointment. But again, if you live in Whittier, that's the most convenient office. Again, it's located at 6700 Greenleaf Avenue. And if you're familiar with our office on Greenleaf Avenue, it's about 2 blocks away. So that's the conclusion of the seminar today. So thank you so much. Again, retirement can be an exciting time, very financially challenging. Before you make the dive and take the benefit, again, consider everything on the table, your age, how long you're going to live, which again is a very difficult thing to estimate, your spouse, your children, your medical care, if you'll have medical insurance after you retire. Those are very, very important decisions. And again, think about it maybe 9 months, 12 months before you retire. But thank you so much. And I welcome the opportunity to meet with each and every one of you to address your specific questions or concerns that you might have. I'm available at the Greenleaf office. You could always stop by there, or you could contact one of our colleagues at the office. And thank you so much. I appreciate your time this morning. And please stick around. There's the next seminar, and I think the next seminar is the topic will be buying a home. So please stick around. And again, thank you for the opportunity to allow us to meet with you. And if you do want to meet with us, I'll give you our phone number. So my phone number is my phone number is area code 562-365-1899. Again, it's 562-365-1899. And again, I'm located at the Whittier Greenleaf office. We could sit down, and again, it's a very personal decision that you'll make, and we could sit down and review all your assets, medical insurance, everything, soup to nuts, to make sure that you're making the right decision for you and your family. So thank you so much, and you guys have a good morning.